Welcome to Smart Stock Watch. Today is May 7th, 2025, and we're diving into the first quarter earnings report of Wynn Resorts. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Wynn Resorts' latest financial performance.
Wynn Resorts has just released their Q1 2025 earnings report. Let's delve into the details and see how the company has performed this quarter. Revenue and profitability overview. Let's start with the top line. Wynn Resorts reported operating revenues of $1.70 billion for the first quarter of 2025, which is a decrease from $1.86 billion in the same quarter last year. John, what are your thoughts on this revenue decline?
While the revenue has decreased by $162.5 million compared to last year, it's important to note that the company faced a challenging comparison due to the Las Vegas Super Bowl in the previous year. Despite this, Wynn Resorts managed to maintain a strong market presence, particularly in Macau and Las Vegas.
And what about profitability? The net income attributable to Wynn Resorts was $72.7 million, down from $144.2 million last year. How does this impact their earnings per share?
The diluted net income per share was 69 cents compared to 30 cents last year. However, the adjusted earnings per share came in at 177 cents, which is below the analyst forecast of 122 cents. This indicates some pressure on profitability, but the company is still generating significant earnings.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. The adjusted property EBITDA was $532.9 million, down from $646.5 million last year. What does this tell us about Wynn's operational performance?
The decrease in adjusted property EBITDA reflects the challenges in Macau, where VIP hold negatively impacted results. However, Wynn has been proactive in managing costs and maintaining market share. The company also announced a dividend of 25 cents per share and repurchased $200 million worth of stock, which shows confidence in their financial stability.
And looking ahead, how is Wynn positioning itself for future growth?
Wynn is making significant progress on its UAE project, Wynn Al Marjan Island, with the hotel tower reaching the 47th floor. This development is expected to open in 2027 and represents a key growth initiative for the company.
Market reaction and strategic initiatives. How has the market reacted to Wynn's earnings report, and what strategic initiatives are they focusing on?
The market reaction has been mixed due to the earnings miss. However, Wynn's strategic focus on diversifying its revenue streams and expanding its global footprint is promising. In Macau, they reported $330 million in revenue, while Las Vegas operations brought in $625.3 million. Encore Boston Harbor also contributed $209.2 million.
With $2.7 billion in cash and equivalents, how is Wynn leveraging its financial position?
Wynn is in a strong liquidity position, which allows them to invest in growth projects like the UAE development and continue returning capital to shareholders through dividends and stock repurchases. This financial flexibility is crucial for navigating market challenges and seizing new opportunities.
Key takeaways. In summary, Wynn Resorts faced some challenges this quarter, with a decline in revenue and earnings per share. However, their strategic initiatives and strong cash position provide a solid foundation for future growth. John, any final thoughts on Wynn's investment prospects?
Wynn Resorts remains a strong player in the gaming and hospitality industry. While they missed earnings expectations, their focus on strategic growth and shareholder returns is encouraging. Investors should keep an eye on their progress in the UAE and other international markets.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Wynn Resorts' performance in the comments below.